Something just broke in the financial markets in the world, and I've got that 2008 feeling all over again. We're going to have to take a look at this, folks. Hello, everyone. Dr. Chris Martinson of Peak Prosperity here, and I've got that 2008 feeling all over again. Here it is. Now, let's set the context for this. What do I mean 2008? Maybe not everybody listening to this was paying attention to the markets or very closely, but there was this great financial crisis, right? Really kicked off 2008 sometime. They said it was because of housing, and then, it was because of these funny things called synthetic credit default swaps or obligations, the CDO, blah, blah. You know what it actually was? Trust got broken. We have a faith-based system of money and credit. And if I know that you're good for something and I loan you money, that's great. I have trust in that situation. But if suddenly trust breaks down, the system can freeze up. And if the system freezes up, very bad things happen. That's what actually almost broke, was the system almost entirely froze. Why? Because Bank A no longer could trust Bank B. I didn't know, if I'm Bank A, I didn't know that Bank B was going to be able to honor all of these very complicated pipings and subterranean loan arrangements and collateral swaps and this and that. So what happened was Bank A and Bank B stopped doing business with each other. And that's really what we call the financial crisis. Or it could have been financial entity C and financial entity D, or any of these within and across each other. In fact, the system of our money and piping of our money almost broke, right? And so that's really what it was, is a loss of trust. Now, what does loss of trust look like when it applies to an entire nation? Well, it kind of looks like this. The Bank of Japan has been buying a lot of the Japanese government bonds, or JGBs, and now they're breaking. You can see they came all the way down here in 2020 and came to this low, but look at this. This is an explosion in the yield of the Japanese government 30-year bond. This is a giant loss of trust, a giant loss of faith. The faith in what? The faith in the Japanese government to control its finances, faith in the Bank of Japan to be able to continue to contain this situation, loss of faith in each other, all the people who are playing on top of this, blah, blah, blah. We have a giant global integrated system of money that now there's no fireheads, no firewalls, no bulkheads anywhere in the system. They trade as one giant integrated global system of money across Japan and the entire Western world, right? So that's breaking down right now. We have severe creaking and popping sounds. And at the same time, we see that the US dollar is getting weak. And by weak, I mean pretty weak. And if it busts below that 98 level, there's nothing but air under that. So this is the US dollar becoming weaker compared to other currencies. This represents a fairly significant change in what's happening in the world. And against all of this, we have Team Trump trying to renegotiating global tariffs, the global economic order. We want a weaker dollar. Everybody else wants their currency weaker. We're starting to see this breakdown in the fair play that you need to have within and across a system of money that's this tightly integrated. And what do I mean by that? I mean, just to be clear, let's look at this. If you just want to sell a single stock, right? We got two investors at the top of this chart over here, right? We got investor A and B over here, and they just want to sell a stock to each other. Sort of, you have to sell to your broker, and then there's a bank involved, something called the Depository Trust Corporation and the National Clearing, blah, blah, blah. There's all this stuff. Actually, it's a lot more complicated than that. This is what's just involved in between a single buyer and a single seller of a single share of a single company stock. Every shape in there, whether it's a circle, a square, a pentagon, whatever the shape is, every shape and every line has to be solvent. If this system breaks at any point, the whole thing doesn't work. It just doesn't work. So we have this piping and plumbing of the system. You and I, we hear about, the stock market went up or down. That's just window dressing. This is what the Federal Reserve and other central banks are busy trying to defend. This is what I'm hearing the creaking and popping sounds from. And this is just to try and buy and execute a trade for a single share of stock. What if we were in the collateral settlement system, fancy name for all those Japanese government bonds are a form of collateral, U.S. Treasury notes, a form of collateral, mortgage obligations that you've packaged and tranched and sold off, collateral. So we have a collateral settlement system. And again, every single shape and line on this spaghetti chart here has to be solvent. And these are all different, mostly, from these. So you can start to get the sense here that the piping and plumbing of our financial system is actually super important. And it has to operate both within and across countries. And it can't freeze up. This is what's at risk right now. Further, if you have a derivative is really just a contract. You can see at the top here. What's a derivative? Well, you do some due diligence, you get your counterparty approvals, because you and I could enter into a derivative arrangement where we agree to bet money, maybe a lot of money, on what the temperature is going to be in Tokyo next February at 3 o'clock in the afternoon on the 3rd. We could write a derivative contract about anything. Okay. Well, and then we have to write up the legal documentation around that. We'll have these master agreements, and then we'll execute that trade. But once we've done sort of the legal part, the trading part, post-trade, well, you got to confirm this, trade confirmations, collateral management. Maybe you're losing, I'm winning, you're losing, vice versa, I'm losing, you're winning. And we're going to have to post collateral into a collateral system. Maybe we're posting stocks, and they have to be held in escrow across this system. The point I'm getting to is, this whole system is now a very, very complicated, but also complex system. And as a complex system, complicated means you can break it down and understand it and rebuild it. A complex system has behaviors that you kind of try and contain, but they emerge. So complex systems can't really be predicted or controlled. They can be understood, but they can't really be directed. Complicated systems you can. So there's some complicated mechanisms in all of this. This is complicated, but there's some complexities in here, including human behavior and international relationships and money systems and things like that. Very complex. But every shape, every line, every box, every counterparty has to be solvent. Anything breaks in this system, anything shuts down, well, then you have some problems on your hand. All right. Well, let's take a quick break. We'll be right back after this message. I know what's plaguing you. You feel like everybody around you has gone insane. Hello, Dr. Chris Martinson here. Look, we've built a world on cheap oil, endless growth, and borrowed time. But the cracks are showing. Inflation's up, resources are thinning, and the old rules don't seem to apply anymore. I've tracked this for years, from the crash course to today, and I'm not here to sugarcoat it. At Peak Prosperity, I'm your information scout, hunting down the facts, cutting through the noise, and showing you how to adapt. This isn't just information, it's a lifeline. The game is changing fast. Are you ready? Subscribe to Peak Prosperity now, and let's get ahead of the curve. All right, welcome back from that. Look, Warren Buffett said, look, derivatives are financial weapons of mass destruction, carrying dangers that, while now latent, are potentially lethal. And the problem is that all these derivatives and all these complex systems, they all have to function perfectly. And in fact, derivatives represent a form of insurance that is only good as long as everybody doesn't try and use the insurance. It's an insurance product, ultimately. I'm trying to hedge my risk. Let's say it's interest rates. I don't want them to go up. You don't want them to go down. We hedge. We use a derivative. If interest rates move a lot, that creates a problem because I thought I was covered. You thought you were covered. Maybe we're not. Here's the point about insurance. Everybody can't be insured against something at the same time. Insurance is designed for the tail risks at the edge. Something really extreme happens, but that's it. So, 3 homes burned down in a city. You can insure against that. The whole city burning down. Can't insure against that. Insurance doesn't work as a concept. So that's what derivatives are supposed to have been, as an insurance product where everybody's convinced that they all have hedged their risk away. And by the way, this is a big, giant, huge machine. $7.5 trillion per day of over-the-counter OTC derivatives trading happens. A lot of it, most of it, actually is housed in where? The UK. This tiny little island nation, 60 plus million people, right, is responsible for $3.7 trillion per day of OTC foreign exchange instruments. And so this just includes stuff like spot transactions, forwards, foreign exchange swaps, currency swaps, blah, blah, that kind of stuff. Okay, this is massive. And trillions of dollars have to change hands every day. Now, if this freezes up, if the plumbing in this system freezes for any reason, because trust gets broken, because party A and party B no longer trust each other in this arrangement, then the whole thing freezes up and the whole system freezes up. And if the system freezes up, nothing works anymore. So that's why Warren Buffett said weapons of financial mass destruction. Because if this bomb ever goes off, the whole thing, the whole system is potentially at risk. If you understand that, you'll understand things around what's called the Great Taking and why laws have been written to summarize and condense and also then offload the risk in the system to, well, you and me, unfortunately. I took a deep dive into derivatives. They go a lot further. That was episode 4 of the Great Financial Crisis and Great Taking series that I dove into, trying to connect all that up. So if you want to look into that, it's a really good series. Everybody should be aware of it, if only to dismiss it and say, that sounds nutty to us, Chris. Gold. Gold is also telling a story. It's up 27% this year. That's a pretty big deal. It continues to go up. Today, it's up another $69. I just took this snapshot a few minutes ago. So gold is telling a story. What story is it saying? When gold is up this much, gold is a monetary metal. Silver is an industrial metal. That's why I don't say gold and silver like it's one word. It's 2 words. Gold is a monetary asset, and it trades like one. And China's been accumulating a lot of it, and so have other people. And we're hearing more and more stories that big money is moving into gold in a big way. Now, we would also call that the smart money. Retail U.S., Europe is still not there, but they'll get there. But this is telling us, for those with ears to hear and eyes to see, this is telling a very important story. Gold is saying that there is something wicked this way potentially coming within the world monetary system. Now, of course, we always knew that was coming. I've been talking, if not preaching, about this for close to 20 years because it's just a math problem. The United States as the core of this, because we have the world's reserve currency, what we've done is we've gotten ourselves into a bit of an economic predicament, a fiscal predicament, a monetary predicament. We have way too much debt in the system. Too much. Can't pay it back. So there's 2 ways you can go down this path of figuring out what to do about the predicament. One is to say, look, we lived beyond our means for a while. We borrowed too much money. We made too many promises, Medicare, Medicaid, that we can't meet them. So what do? Well, since we lived beyond our means, borrowed money we maybe shouldn't have for stuff we didn't need, we're going to have to live below our means for a while. Now, that's the situation that Trump and his team in dissent came in under originally, back in January of 2025. And they said, we're going to do this Doge thing. We're going to contain spending. We're going to have to chop $1 trillion off of this big old budget of ours. And we're going to contain spending. And that's how it's going to be painful. We're going to take some lumps. But good, somebody had to do it. That's path A. Path A is voluntary simplicity and austerity. Path B is just kick the can down the road a little longer and you just let nature take its course. And at some point, the whole system just falls apart and you get into a big, giant, nasty, hairy, ugly sort of crisis, fiscal monetary crisis. Path A or path B? Well, they started us down path A, but just a couple days ago, we found out that they ditched that and the big, beautiful budget bill came through. And we now have an economic accident is on the way. It's assured at this point. It's going to happen. Another $22 to $25 trillion in deficits are on the way. The blue line here is the deficits that we were going to have before this big, beautiful bill came through. That blue line, that shows that's $2 trillion of fiscal deficits in 2025. It was going to wobble down a little bit to maybe 1.8 trillion here over until 2027, but then it was going to wobble its way all the way up to about $2.7 trillion of fiscal deficit by 2035. Now it's going to be $1 to $2 trillion higher. I mean, $1 trillion higher ish in here. So we're going to go from 2 to 3 instead of from 1.7 to 2.5. We're going to, it's like at least, I it's about $2.5 trillion of new debt per year is coming on that under that standpoint. So yeah, what's that? $500 billion more per year. But you add it up. When you start at 2 and you end at 3 over 10 years, we can average that to 2.5. 2.5 for 10 years is about 25 trillion more bucks that's going to be added to this whole thing. So I can guarantee you what's going to happen. And oh, by the way, all of that's without anything extra, like a war or a recession or a depression. Those are extra. That's like going to a car lot and buying a car and you're signing the paperwork to take your car and they said, oh, wait. Did you want a windshield and tires with that? Because those are extra. They never plan for extra in these budgets. So this is best case scenario. It could get a lot worse than that. At any rate, that's going to lead to a massive, massive financial accident at some point. And I think we're already seeing the early creaking and popping sounds in the global bond market, which is why in the part 2 of this for my subscribers, I'm going to go into why it's over. I think prepare for battle, as Gandalf said. Prepare for battle, folks. This is it. There's nothing we can do. This is now locked in stone, and we have too many creaky sounds coming out of the bond markets. I think we're in the final stages of this. I hope we have a couple of years left in this story, and that's if we're lucky. So with that, thanks very much for listening. Let me know what you think in the comments down below, and I will see you next time. Bye for now.